if you're listening, looking in on the fence on infinite banking, I will encourage you to continue to pursue the facts. You're going to hear a lot of opinions from financial advisors or financial entertainers, but just focus on the facts, not opinions. And a great resource would be talk to other IBC practitioners and how this has impacted incorporating infinite banking into their business, and as well as working with the Institute.
Welcome to the Infinite Banking Initiative, a podcast from the Nelson Nash Institute, the official home of the infinite banking concept and becoming your own banker. I'm Lee Barganier, along with David Stearns, and we're your hosts. In this episode, we're joined by Anthony Faso from Las Vegas, Nevada. Thanks for listening. Anthony, thanks for joining us. We want to hear your story of how you discovered the infinite banking concept.
Well, first of all, it's an honor to be on here. So I want to thank you guys for inviting me. I'm going to take how I got here. I'm not going to make it too long, but I'm going to tell you it's going to start really more in high school when I saw the movie Wall Street. There was a time where I wanted to be that stockbroker, that financial planner. Like, I was raised by a single mother. We never really had much money. So money always fascinated me in ways to make it. So honestly, I thought I was going to be a stockbroker. And then when I went in the Army, Army doesn't have much need for stockbrokers. So I'm like, if I can't do something that's going to help me, I did something macho, or what I thought. So I was in the infantry. And then when I came out, I ended up getting a degree in accounting and went down that CPA route and ended up worked for PricewaterhouseCoopers. And then I had my own firm. And when I had my own firm, again, that draw to helping people with their money was even more intense. And I was working very closely with my traditional financial planner. And this was about 06 and 07. It's like, hey, we have this program where you can get licensed. So now when you're referring people to me, I can share in the commission. So to me, I thought it was a win-win, because I remember back in the day, that was kind of my ultimate dream. And then 08 happened. And I saw people did everything they were told to, max out their 401k, paid off their mortgage, and now their 401k was a 201k. And I didn't have the gut to sit there and be able to tell people that. So I actually told them, like, thanks, but no thanks. I don't have the stomach for it. And the reason why I went to that long intro is because I think a lot with infinite banking, one person told me it can't be taught, it can only be caught. Like, you have to be in the right mental space to really be open to this idea. And the devastation in 08 is what really opened up my minds, because I was your CPA. I was a guy telling you, oh, you owe 20 grand in taxes. Oh, well, if you put 100 grand over here, then you're going to get a refund. And I look like I look like a rock star. But
you still look like a rock star, by the way.
Yeah, I did. And then I knew that the path I was on personally was not going to get me to where I wanted to go. So I was really in this area where I was searching for information, and I went to a business luncheon, and one of the guys, where you go around and explain what it is you do. And one guy said, well, I teach clients how to set up their own family banking system. I'm going to tell you right away, completely over my head. But I did think, well, I bet they have complex tax returns and they need a CPA. So when he asked me out to lunch, I want to get the tax work. And David, he was bad mouthing 401ks. Lee, you tell me how terrible IRAs were. And I'm like, how dare you? But he goes, read this book. And I read it, and literally I had trouble sleeping the next 3 nights. Like, does this really work? why haven't I heard this before? Why isn't everybody else doing it? A lot of the common questions my clients now do. And so I would tell you, to be honest, I beat this pretty hard. I'm a very skeptical, analytical person. And I went to all these different people. Most of them were financial planners, right? Because, that would never work. My financial planner says, you should never do that. The rate of return is terrible. And then I went back to my mentor and he's like, it's not about the rate of return, right? It's more. And one thing he told me is, would you rather make, 10% on 10% of what you make or 4% of 100% of what you make? And he really got a different perspective. And then another person says, well, they're just doing it because of high commissions. And I went back, you're just doing this because of high commissions. He's like, well, as a matter of fact, the way we design this, we're taking a huge cut in our premiums. So I couldn't find a hole. I mean, I had all these opinions people told me, but to me, it just made sense. So I literally took a leap of faith and I got one policy. And you know what? It worked just like Nelson said in the book. And so that really gave that experience for me, the comfort level for me. But then at this point, I was running a CPA firm, and people would come to me and say, hey, Anthony, I don't trust the stock market. I need to do something. What should I do? And I'm like, well, this is what I'm doing. Why don't you read this book? And then that was so well received. Then I got licensed and really turned this into a business. And now I had my CPA firm, and then I had infinite banking. And then somewhere way back here, I had my family. And to me, the family was very important. And I was working really hard. My family barely saw me. So my daughter at this time was in middle school. And she had made it clear that she was going to go away to college. And Dave, maybe you can relate to this, but I made it clear to her she's going to an online all-girls Christian academy. And to my surprise, there was not one out there. I talked to some buddies, and we were going to maybe start one, but I said, just in case she does go away, I need to be home. So I ended up selling my firm and just started focusing solely on infinite banking ever since.
CPAs are a tough nut to crack. My CPA keeps Nelson's books in his lobby, so they keep disappearing. So I guess he's helping me out. But other than that,
the CPAs are very difficult. To be honest, when I sold and had my firm, it was I had the leads coming in, right? Because I didn't have to really market. People already trusted me, and I knew them well enough on who this would work for and who it wouldn't. Then when I no longer had those leads coming in, I thought all my CPA buddies, like, I'm just going to get leads from everybody. That was not the case. Just like you said, David, very hard nut to crack. And I think one of the issue is CPAs are ingrained from the beginning to never be wrong. We're always we're very skeptical and very cautious. And something like this outside the box with some intangibles is hard for them to grasp, and they don't want to give poor advice when they have traditional financial advice that is more custom than people are around to, and they get that tax savings right away. It's a very easy sell for them.
I've always thought that CPAs actually work for the IRS. And they're just making sure everybody gets their share. They help their client save some tax dollars. But everything's within the tax code. It's all about tax. It's not about creative thinking. And you mentioned, when you first met that gentleman who was teaching people how to do private banking, that you thought he'd be a good client because it sounds like it would be a complicated tax return for somebody actually doing that.
Well, I would say in regards to CPAs also, and if you ask most people how they rate their CPA, the barometer is how much of a refund they got back this year. So when you do that, it's very enticing for them to give you those short-term results. But I would say from what I've seen more on the back end being the CPA, some of the dark side of having that money in that 401k, not only can you not touch it, but that volatility of the market can really impact the lifestyle you're going to receive in retirement. And also, I think it's a big myth that you're going to be in the lower tax bracket when you retire. Maybe you will, but it really depends on what your plan is. But I hope I'm not getting too deep in the tax, but this is kind of one thing that, when people are looking at that tax hit, we have to realize that like right now, most people's biggest deductions are their mortgage interest and their children. Right. And when you get in retirement, hopefully the house is close to being paid off. So that deduction's gone. And even if hopefully those kids still aren't living with you, but even if they are, there's no tax advantage. So the problem is, even if your income may go down, your taxes, your tax deductions are leaving. And if you have Social Security, that's taxable. IRA, 401k is taxable. Lucky enough for a pension, that's going to be taxable. Or if you have a business, that's taxable. The problem is all of your income is taxable, and we've lost our tax deductions. And that's just under the assumption taxes are staying the same. I mean, we're going to see right now that Trump won in office, but in my eyes, this large deficit, some point we're going to need to pay it. And I'm really praying that the DOGE, the Department of Government Efficiency, can help. But without that, they're going to have to raise taxes. And so I do think that when we are relying on those 401ks in a low tax environment in your retirement, high chance you can be sadly mistaken.
Yeah, you're right. It's a gamble at best. And it's all you need is another 2008 event, and there you go. Plus on top of that, so you don't have much control of your quote assets in that kind of environment.
So what kind of clients do you typically work with? Is there a certain niche market that you have?
I'll tell you one thing we've done. We wanted to be in a position to help everyone, because I said earlier, I was raised by a single mom, and I want to make sure that we can help single moms. Because really, I would tell you, like my largest client, to be honest, I'm helping him just get more millions. Like he's already got, I'm not really going to impact his life per se or change his kid's life, but that single mom who probably doesn't have enough death benefit and really needs capital sometimes when life happens. If all that money is in a 401k, she can't touch it. So we're giving her liquidity and the death benefit. But really where our niche is really helping people who want to use the policy to buy assets. Like I say, we follow a lot of what Robert Kiyosaki says. You spend your money on one of two things. You buy a liability or you buy an asset. And a liability takes money from you. Asset brings money to you. The great thing is infinite banking can work for both. And we originally started helping people pay off debt and use to pay liabilities. The problem we found is we never solved the problem on why they got in credit card debt in the first place. So we help them pay that off with policy loans. But since we never solved the underlying problem, they ended up getting more credit card debt. So that's when we had shifted more to buying assets. So most of our clients are people who want to create some passive income. Kind of our slogan is passive income to be more than your monthly expenses. So our niche is people that want to get there, whether they're there already or they're on their way or they don't know what to do, but they know where they want to end up. So we focus on them using it to buy assets.
So what would you say to someone who's listening to this or watching and they have a CPA and they're very intrigued by the infinite banking concept? What advice would you give to that individual on, opening that dialogue with that CPA?
Well, first I'd say, how much money has your CPA made you? I mean, CPAs, their expertise is tax, not investments, or not life insurance. So unfortunately, it's twice because I'm the CPA. So they've done a great job on protecting that brand, and CPAs are typically well-respected advisors. Which a lot of people, maybe they don't have financial advisors or some of these other things, but they all have CPAs. So they end up relying on the CPA for information that is outside of their niche. So you do want a CPA who understands IBC, but if they say yay or no should not impact your decision. And really, if you do meet a CPA that says you shouldn't do this, ask them why. And just remember, like all the rebuttal I got from people, I found out the truth. It wasn't about commissions. It's not about the rates of return. I think of a CPA who's open-minded, that they would love this concept, but it's hard for them to get to that point. And if your CPA isn't there, then you need to find one who is.
Uh-oh. Yeah. Well, hopefully you're not going to be excommunicated from the community for saying things like that. But
well, believe me, those my CPA buddies think I'm crazy anyway. So, and hopefully you're getting the gist. I'm not your average CPA, so I'm not fully in I don't have my pocket protector on, but But I would tell you, I am so passionate about infinite banking. I will get into a discussion with anybody. I feel that not only do I understand the theory, but we could also provide the math. I like to say the whole life insurance, because again, that's infinite banking is different than the product, right? The product is a whole life policy, but that I like to say is like the Swiss Army knife of finance. It does more than just the death benefit. There's so many things that it can do, that it can accomplish. We have the death benefit, the tax savings. Most state has some level of asset protection, the easy transition of the death benefit. And really, you look in the math, if somebody's going to buy an if the short term wise, they will be ahead. But life is a marathon. We will eventually surpass them tremendously. So I'd love to get in with CPAs, and once we get in the numbers, which they like to get into, and we're do a lot of a comparison. All right, your client's going to buy a rental property. Great. They got to store that capital somewhere. Well, they're going to store it somewhere that's safe and liquid, typically going to use a bank. And so we use the truth concepts calculators, which if you're not a practitioner, if you're a practitioner, you're probably using it. But if you're on the fence learning IBC, I would definitely check out those truth concepts calculators, because that really, to me, provides the math behind the infinite banking and becoming your own banker. So we will compare two scenarios. All right, you're going to store your money in a bank, buy a property, withdraw the money, for the down payment, breaking the compound interest curve. We're going to put in a policy and not withdraw it. We're going to borrow against it. And we just do an analysis, same money going in each scenario, and then we buy the same asset. So dollars in, dollars out, exactly the same. But when we look at the bottom line on who has more money, doing the infinite banking concept will win every time because of the power of compounding. And we're going to eventually, the policy will earn more than it is in the bank. And we don't have to pay the taxes as well.
Yeah. You're talking about the math, which is critically important, but the intrinsic value of the freedom and the control that asset is critically important also. Okay. So what do you say to a client who says, okay, listen, I want to maximize an infinite banking concept system, and then it ends up looking like 5 or 6 whole life policies? How do you tell them? They say, okay, how do I retire on passive income and still sustain those policies? How do I do that when I still have premiums due and all this other stuff?
Well, I would say
have that conversation.
Yeah, but also we have to meet them where they are. Right? If somebody's 40 years old, particularly at the beginning, many people are thinking as your premium as a payment. And we want to end payments as soon as we can. So in their mind, when they, again, what their word is retirement, or we like to say where we're going to wind down and enjoy the work on the things that we enjoy, they're anticipating that they do not want to continue to fund premiums. So we meet them where they are, and we show them the flexibility of using whole life, that when you want to, you can turn premiums off at any time. So I like to let them know, hey, at whatever age you have in your mind, where it's 65, or we're really pushing people to really think more about 70, we have the option where we could turn premiums off via a reduced paid up. And anybody listen here talking about the IUL, you cannot do that on an IUL, which is one of the many problems, flaws in using that product for infinite banking. But I want to show them that is possible, that we don't need to fund this. And if you want, you could start taking that cash value and turning that in to tax-free cash flow. So that's typically where, when we meet with somebody, that's where we're going to tell them that that's what that's one option. But ideally, what we'd like to be in a place is during your working years, let's take that cash value and let's put it to work. It's going to work in the policy no matter what, but we have the ability for it to work in multiple places. So let's take that and buy an investment, whatever that is. It might be stocks. If you truly know stocks, our goal is, our theory is you should only invest in things that you understand. If you understand in stocks, then you should invest them. If you don't, then you should not. But I think infinite banking works well with cash flowing assets, which is why a lot of people are using it for real estate, which I have as well. So I'm using a policy loan for my down payment, and I have that asset repay the loan. It'll take who knows how long it'll take. Good tenant, maybe shorter, bad tenant longer, but eventually that loan will be repaid off. Then I have that one cash flowing asset with equity, as well as that money never left my policy, so it continued to grow. So we teach people to use their policy to leverage against it to buy assets. So then what we want to be is the option when we do want to wind things down. We have one option where we turn premiums off, but ideally we can create even more wealth, particularly generational wealth, if we have the ability to continue to fund those those premiums. And also, what I tell people is when you are winding down, your focus and priorities are going to change. We're not looking necessarily to build a high net worth. We're looking more for certainty and security. So we have assets that are more volatile, because many people may still have money in qualified plans and 401ks, or maybe it's some other asset or business that they don't want to manage anymore. When they liquidate it, they need to put it somewhere that's safe and secure, and we could use that to fund the premiums for many years. Or maybe we've taken these loans to buy real estate. We can use that to repay the loans. So now that cash flow from those assets you can use for your retirement income. But the bottom line is we start with letting people know we can turn premiums off when you want and turn this into tax-free cash flow. But ideally, we also have the option to make this even grander by finding ways to shift assets and continue to fund those premiums, which increases the death benefit, which again can increase the legacy for the next generation.
Yeah, that's important. That's one of the principles of IBC is don't be afraid to capitalize, which means pay as much premium as you can when you can, and don't, I don't want to say turn off the premium like you did, but don't fund the premium with other assets like, partial surrenders or whatever, unless you absolutely have to. Because it's a golden goose, you might as well keep it growing as much as you can. So good. Did you ever have any talks with Nelson about being a CPA?
You know what? I don't know any particular. I have some stories from Nelson, but I have a feeling it wasn't flattery when he was talking about CPAs. I recall.
That's what I was going for.
Yeah.
Yeah. I mean, you guys you're important. You're an important part of the financial landscape, definitely. So, I just wish more of them were advocates of the concept.
As do I.
So tell us about meeting Nelson and your relationship with him.
We would have him out here about maybe once or twice a year, which was such a treat because you read this book, but to actually have the author do a presentation, but also we were privileged enough where we would we would be able to spend some one-on-one time with them before the event and after the event. And one fond memory I had is he came out and did a full day seminar, which was amazing. And I don't recall what year this was, but I know he was up there in age. You could not tell it from his energy level because he would stand up there with his glass of water, tell the same jokes, and this one thing I learned from Nelson is he'd tell a joke or he would say something, then he'd take a drink of water to let it soak in, right? And for people to get a chance to respond. But one fond memory I have from Nelson is he came in, I think on Friday, we had a little meet and greet for our clients. He spoke all day on Saturday, and then he wasn't leaving until Monday. So we got to hang out with him all day on Sunday. And, I was told Nelson likes to go to church on Sundays. And I'm like, so do I. But I live in Las Vegas, aka Sin City. I have a feeling our churches are going to be a little different than in Alabama. And so he came with us to our church. It's one of the non-denominational kind of, might call them a mega church. I think there might be 1,000 seats in there, a stage with a full band. And I'll say I was a little cautious of what Nelson and Mary were going perceive it. They came dressed to the tilt. Mary had, a nice dress and her Bible. And then in the service, like I'm always looking, when you invite somebody to church for the first time, you're always trying to get an idea of if they're enjoying it or not. But Nelson and Mary both were standing up. They were clapping, had a wonderful time. And then we went out. To lunch. A lot of good things about Vegas. A lot of not so good. But one is there are some celebrities floating around. And when we went to lunch, sitting behind us was the comedian Carrot Top. I don't know if you guys are familiar, the prop comedian with the big, bright red hair. So I took that opportunity and I snapped a picture, unbeknownst to Nelson or Carrot Top. But I do believe I'm the only one in the world that has a picture of Nelson Nash and Carrot Top.
So, well, you need to share that picture.
I did, Leah. I did send it to you. And then afterwards, we had a barbecue. And we had the kids, and my business partner Cameron was there, and he had some younger kids playing in the pool. Probably no surprise to you two, but a surprise to everybody else. Nelson came out with his swim trunks. He had late 70s, I would imagine, early 80s. And then you know who came up behind him? Mary, in a bathing suit.
Well, it's the pool, man. Well, you can't swim with a dress on. Yeah.
But I don't even know if my wife was planning on going to the pool. But I'm like, Vic, if Mary's going in, you're going in.
Is this where he stayed in the casita and on Joe's property? And yeah, okay.
And not only was he in the water, he's throwing the ball with the kids. Like Nelson was just one of the kids, and it was just great to see. Got the opportunity to see him on the professional level of speaking to our clients, but then on a more human level of him speaking with and playing with our children.
Yeah, he loved to interact with the kids.
Yeah.
And some of the best testimonials he got are from 10-year-old kids, talking about stealing the peas and things like that.
So, Anthony, you are an authorized infinite banking concept practitioner. What does that mean to you? And why is that so important to you?
Well, I would tell you, I've been doing infinite banking since 2009. So, and I was going to think tanks, and I'm not sure when the practitioner program became instituted, but I jumped at the chance, not knowing much about it. But to me, I did it out of respect for Nelson. He has poured into me so much. And you know what? Outside of paying Nelson to come out here and speak or to buy the books, like this guy who has literally changed my life and the life of my kids, for me to pay some annual dues is completely my honor. So that's how I got involved, and I believe I was in it from the first class, and I've been a member the entire time. And I'm going to be upfront with you guys. There was a period of time where I almost canceled it. I mean, when I had sold my firm, funds were low and expenses were high, and I didn't see the value. And then I got one phone call. Actually, in 1 week, I got 2 leads from the Institute, because before that, I had not. And what I found interesting up until that point, most of the time to get people, it was interesting. We would negotiate. We would be very strategic when we're talking to a client on when we drop the W word. Like, when did we say whole life is a product? Because there's so much misinformation about it, right? So we were very strategic. But here we had somebody in our office, knew it was whole life, had read the book.
Well, so Nelson talks about it in the first line of the book,
I know, but
so don't be ashamed of it.
No, but you know what? When you're there trying to make money, like you're a little more cautious of meeting people where they were at. And now partly is my confidence. I say that very clearly, partly to weed people out, or if there's any obstacles, I'd rather get it out in the open now. But not only was that case the easiest one for me to do, because they just had clarifying questions. I didn't have to justify and get in sales mode. I was able to get in teacher mode. And honestly, he put in a high amount of commission, and to be not a commission, but premiums. Premiums from that case, I think, paid for my dues for a lifetime. If not that one, then he came back and did another large one. So but now that was maybe 7 years ago. The Institute has changed a lot. I think there's a lot more resources that is available. So and I think the interaction with leads are higher, but also there's more and more people talking about infinite banking. I mean, you see it on social media a lot. More people are talking about it, but me having that practitioner for helps many ways. Not only I think it's out of respect for Nelson, but if I'm in a competitive situation, there's somebody there who isn't certified. And so that kind of gives us and I kind of relate it to this way, if your life's on the line, right, and you're on trial for murder, you're going to get the dream team like OJ can, right? But in all practicality, you can't afford the dream team because they're expensive, right? But with infinite banking here, not that I'm calling myself the dream team, but there's plenty of other practitioners out there. But you can get the dream team of infinite banking with no additional cost to you. So why wouldn't you do it? And that way you have that assurance that people know what they're talking about. Because there's a lot of people that are using the wrong product, the wrong design, but also they don't have the infrastructure to help on the back end. Once you get, people can be really good at sales, but with infinite banking, service is a very important piece. So you need somebody who's going to be good at both, and somebody who's gone through the effort, the time, the money, and the education. You can get a much higher assurance that you're dealing with a practitioner that you are in good hands.
So one of those two cases that you got, you said it wasn't a problem talking whole life. It wasn't all it was answering questions. So why was that? Why was he so well prepared for talking to you about IBC? Did you ask him?
Before, with my other clients, people would have a problem, or meaning that they want to save what to do with their money. They didn't know what the solution was. And I'm coming up to them, look, here is a solution. Now give me $20 and I'll give you this book. Right. So I was making people read a 100-page book, which, I mean, there's pictures in there. And I tell people.
So you only got to read 57 pages.
Yeah. I said, Cameron read it, my business partner, right? If he can read it, I think you can as well. But so before I'm trying to shift somebody's paradigm and their way of thinking, but here somebody independently realized they had a problem and was looking for the solution and wanted to see if infinite banking was a solution for him. So it really came a difference, because before I really felt like I had to have my sales skill on, but when somebody already read the book and have questions, I don't need to sell them. I just need to educate them. And so now I can have my teaching hat on.
Okay. So that was, I wanted to hear that part. They already read the book.
Yeah, that was key. They already read the book.
Right. Yeah. Nelson used to say over and over and over again, that book is not written for financial advisors, it's written for the general public, because the client, the customer, is the most important individual in the whole equation, regardless of who their financial advisor is, who their infinite banking practitioner coach is, who the insurance company is because that client, if they don't understand, what they're doing and why they're doing it, then they're going to be incompetent and they're going to destroy everything related to it. So having, those are the best types of clients to have. Those are ones that have gone down that discovery trail and they're all in. They're just trying to find the right match, like you, obviously. So that's pretty important. I'm glad you brought that up. Well, the second point is, we'll really back to the book again. So it's kind of a duplication where Nelson would say that the book is a great litmus test. Okay, to see if you do have somebody that you want to work with or not. If they don't take the time or take the time or the energy to read a 92-page book with 57 pages of words, then they're probably not somebody you want to deal with in the first place. So that's just one of the things I remember coming up more than once.
Well, is there anything else that we have not talked about that you wanted to share with us?
Well, I have a couple stories of how infinite banking has helped people. So I got a couple, but one I think is the most entertaining or interesting, where infinite banking helped a team win the Little League World Series. Now, I had a client that he'd been a client for a few years, and then they came in and we were talking, and I could just tell on his face, like something was off. He was stressed. And I'm like, hey, so what's going on? Tell me what's new. And he's like, well, the good news is our team, my son's little league team, has made it to the Little League World Series. I'm like, man, that is amazing. You know how difficult that is, and what an experience for these young kids. And he goes, but the problem is, to get to this point was very expensive. There's all the equipment, there's all the travel. We had the whole family come because we wanted this to be an experience, and we didn't know how far we would go. He goes, to be honest, we didn't think we'd go all the way. But the problem is now my credit cards are maxed out. And he goes, I'm interested in buying a house. And now that it also impact my credit score. And now we have the most expensive trip. And I really don't know. He goes, of course, we're going to find a way for my son to go. But it's whether does a family go or like, what does that look like? And I said, do you remember that book, that I had you read a couple years ago when we set up that policy, and you keep complaining about making those premiums because you think it's a payment, right? And I keep telling you it's not a payment. Think of it as a deposit. That's money going into your account that you own and control. I go, how much credit card debt you have from this? And then what is this trip going to cost if you guys were to go and enjoy it, where the whole family comes, you guys can go out to dinner, kind of make a complete memory of that. And I go, do you know that you have enough cash value in your policy to pay for that trip and to pay off that credit card? I go, what that's going to do is, now I know you don't like paying the credit cards, so now we're going to give it to the credit card companies, because you're going to take a policy loan, pay them off. And then, but instead of, I know you're complaining about paying them 18%. Well, you're not going to complain about paying yourself 18%. We're going to continue to pay that same amount of money. And you guys are going to go on this trip, create those memories. And during this time, when you get back, your credit score will be higher because we've had this debt off. So now you can have this trip guilt-free and be able to buy that house you'd wanted to. If you're listening, looking in on the fence on infinite banking, I will encourage you to continue to pursue the facts. You're going to hear a lot of opinions from financial advisors or financial entertainers, but just focus on the facts, not opinions. And a great resource would be talk to other IBC practitioners and how this has impacted incorporating infinite banking into their business, and as well as working with the Institute. IBC is a great tool, and it can change lives, and it can be a great impact on the business. It could really be a win-win. We're helping people. We've generated a business. And now, Dave, as you or may not know, my son is joining the firm, so it's kind of creating some more of a legacy. But I've also taught my kids. My kids have policies. And they've used it to flip houses. My son is started a vending machine business. My daughter's using it to buy her to buy a house. But all of that is because they had, for one, they had the financial sense, but also they had control of the capital. When we give that capital to others, that means that we are unable to use it. And let me make one more. Sorry, I could talk about IBC all day long, but we focus so much on the cash value, right? And I know I do, until my daughter had brain surgery, and then that, you guys all know too well. We never even think something like that could happen to a child. And, unfortunately, my daughter, she ended up needing a second one, but she is healthy, doing well. However, she's uninsurable because of that. But fortunately, because we have those policies when she was younger, once we got them, they can never take it away. And a little note is when she got declined, she was smart enough to know, well, that if I can get a policy on myself, can I get a policy on you?
Whoa.
Right? Because
Yeah.
infinite banking, again, if you're uninsurable, we just get a policy on a family member. And that's exactly what she had done.
Wow. That's great. I didn't know that. That's great. Thanks for sharing that with us.
I think that's a great way to end this. And we really appreciate you sharing your personal journey, your personal stories, and then also sharing a little bit with about your clients, and how this has impacted their lives as well. We thank you so much for all that you've done to continue the infinite banking concept and to practice it the correct way. We appreciate it.
It is my pleasure. Thank you guys for continuing the legacy of what Nelson built and just spreading this out to more people. So we appreciate you guys, and go make it a fantastic day.